We've got, if you close a week out at 2115, we've got a 100-week momentum oscillator, which is like a 2-year average oscillator. It has a ceiling you would not believe. In other words, it's far clearer than what you see on gold. When you get up to about 2115 on a weekly close, you're going to leave the earth. Gold will launch. It'll go from congested behavior to vertical. But I think in that time, you're going to see silver vastly outpace gold, and you'll see the miners come up out of this hole and reprice themselves, back up toward the highs of the last couple of years pretty rapidly. So on a percentage basis, if one were to go long gold now, or go long silver, or go long miners, I think those who go long silver and miners in the next upturn will make far more in the next several quarters than will gold in terms of percentage gain.
MichaelOliver, an analyst at Momentum Structural Analysis, suggests that gold is poised for a significant breakthrough above the $2,100 mark. He argues that once gold surpasses this crucial threshold, it will likely experience a substantial price increase. Recent market movements support Oliver's stance, with gold reaching $2,028.44, marking its 4th consecutive day of gains. The rally was particularly pronounced during the mid-North American session, as U.S. traders returned to their desks and absorbed the latest economic news. The decision by China to lower interest rates and the accompanying drop in US Treasury bond yields have contributed to gold's upward momentum. In addition to the bullish outlook on gold, MichaelOliver predicts that silver will outshine gold shortly, with mining companies also experiencing rapid appreciation in their stock prices. While Oliver believes that gold will eventually see a surge in price, he expects silver and mining stocks to rise more sharply in the short term. This anticipation is supported by a research report released by the Silver Institute on January 30th, which suggests that silver prices are expected to reach almost $30 per ounce, marking a new high level in a decade. This projection is driven by an anticipated increase in industrial offtake for silver, highlighting the precious metal's multiple applications in various industries. MichaelOliver acknowledges that silver has demonstrated characteristics typical of a commodity, showcasing significant price swings. For instance, in 2022, silver experienced a sharp decline, followed by a notable recovery in percentage terms. This highlights the inherent volatility and uncertainty surrounding silver as an investment. In more recent market developments, spot silver saw an increase on Wednesday. This was partly attributed to a softer US dollar and supported by haven buying, as market focus turned towards the minutes of the Federal Reserve's January policy meeting, which were due to be released later in the day. Before diving into MichaelOliver's insightful interview, subscribe to our channel and give this video a big thumbs up.
And consider that commodities, they hit 140 in 2022, okay, Bloomberg. It's now trading under 100. Where's gold? At or higher than it was in 2021, 2022, okay? So it's doing well. Gold it doesn't have to lead them. It's already up there ready to go. Silver has behaved more like commodities, although it's in correlation to gold. While gold went sideways, silver had this arm wrestling, like a tubal decline. It bottomed in August of 2022, silver did, down around, I think it was $17 or something. Gold was $1,613. From that low, both metals exploded percent-wise. Gold went up well over 2,000 again. Silver went from 17-something to almost 27. Or 26 at least, a huge percent move. And since then, we've gone into a range again, but well off that low. I think silver's trying to emerge now ahead of gold out of this recent pullback that we've had over the last, let's say, 3 months especially. There's been an arm wrestling pullback, especially noticeable in miners, where silver's gone back down into a range from roughly 22-something to 26-something. Actually, about 22. I'm looking at monthly closes have been in about a $2.20 range for quite a few months now. Miners, on the other hand, have continued to bleed. In fact, a couple of weeks ago, they puked. They sort of made like a V-bottom type thing, or a potential V-bottom, which is what we think it is. We think that puke out we just saw a week or two ago is probably the kind of low you won't linger around much. You could come out of here in a sharp manner. There's some momentum trigger levels on the miners. In fact, we ran Newmont and Barrick 2 weeks ago. The next move up in gold, which we think gold is postured below the starting gate. And its starting gate basically is the 2100 level. I think you get above 2100 again, you're gone. Okay. They've been fighting at the upper 2000s for the last couple months.
Do you need a monthly close above 21?
No, just getting up there. And in fact, we've got, if you close a week out or 2115, we've got a 100-week momentum oscillator, which is like a 2-year average oscillator. It has a ceiling you would not believe. In other words, it's far clearer than what you see on gold. When you get up to about 2115 on a weekly close, you're going to leave the earth. Gold will launch. It'll go from congested behavior to vertical. But I think in that time, you're going to see silver vastly outpace gold, and you'll see the miners come up out of this hole and reprice themselves, back up toward the highs of the last couple of years pretty rapidly. So on a percentage basis, if one were to go long gold now, or go long silver, or go long miners, I think those who go long silver and miners in the next upturn will make far more in the next several quarters than will gold in terms of percentage gain. Though gold, of course, is the mama market, but the other markets sometimes will take a lead. And I think we're at that point now where you might see over the next week or two, gold inching up, whereas the miners go up much sharper percentage, and silver is already, it went from under 22 to above 23 in 3 days last week, okay? Like, I'm not going to die. I'm back, okay? And I think that, what was that, like a 4% rally, 4 to 5% rally, whereas gold only inched up 1% off its low. So that's the kind of dynamics we think we're facing.
MichaelOliver reflects on historical bull markets in gold, noting that they typically involve substantial exponential increases in price, particularly during the later stages of the bull market. In line with this trend, April gold has continued to show a slight bullish edge into another trading session, achieving a higher high overnight. This has been surprising given the measure of strength observed in the dollar. In a broader context, Oliver suggests that recent trends in the stock market might signal an impending downturn, potentially leading to an upturn in gold prices. As stock index futures show a drift lower ahead of the release of the minutes from the Fed's January meeting, and with Nvidia Corp's quarterly results after the closing bell likely to be a key event, the market is poised for potentially significant shifts. These factors could contribute to further volatility in the stock market and gold prices. Let's get back to the interview.
I think that the events out there this time are different. You've got to look back at the prior bull markets in gold. They were basically 8-fold moves. You go back to the mid-1970s, gold was $30-something, a fixed price. Unleashed, it went up to 200, then ultimately 850 by 1980. So in 7 or 8, 9 years, it went from the mid-30s to 850. Okay, you do the math. It was enormous. But a lot of that move occurred literally in the last several quarters of the move. It was the bull market was sort of arduous arm wrestling, but nice upside, and suddenly it just unleashed. And that was when, if you go back and look, for example, on a chart of gold, go back to early 1979, look where gold was, look where it was in early 1980, look at the percent. Go back and look at a silver chart, early 1979 to 1980. It was like, it beat gold, like quadrupled it in terms of percent gain. So it's at those points of dynamics in the trend in gold, not the arduous arm wrestling process, but when gold starts to go vertical, which we think it's about to, that's when the miners in silver go ballistic. It's as if investors out there who've been denying and not participating in it suddenly say, I got to be in, okay? Now, we think we're also seeing evidence of that in fact, we put out the report last week. It was quite funny. It was like Wednesday last week, I think it was. We prepared Newmont and Barrick used the US Barrick symbol, GOLD. We ran some momentum charts saying this is probably the low, but the trigger level's here. And it was only like a buck or two above where each of them were. And the next day we heard the news, that Druckenmiller had dumped some tech stocks and gone in big time in Newmont and Barrick. We did not know that. But obviously, he was sensing something that we saw in the charts. What if that happened to more and more asset managers who've neglected that sector? And we think there's also a good inverse correlation to watch right now between the stock market and gold. Look what the stock market's done since December when the Fed minutes came out. It's partied. Yeah, tech-led, but a lot of sectors within the market also went up, not to new highs, but had a nice move. Fairly dynamic, in fact. And the S&P and NASDAQ managed to actually nudge out their 2022 price high by single percentages. But it was dynamic. Look what happened to gold since December. Look what happened to T-bonds since December. They went down in price in T-bonds, up in yield, down in gold. Went from above 2,100 down toward, well, we traded 1990 something last week. Now back to 2030. They went down while stocks went up. Now, most gold investors think, if the stock market goes down, gold's going down. No, that correlation is minuscule correlation. You go back in history.
You don't even think it'll go halfway down the drop and then shoot back up like 20?
I think they're almost directly, weekly, inversely correlated now. Now, sometimes on hourlies, for example, last week we had a Fed report or a market report that would impact the Fed, supposedly. It spooked the stock market and spooked gold on the same day. That can happen. But in terms of week to week, month to month, we think they're inverse now. And if you stand back and look since December to the present, you'll see in T-bonds and gold, it's been a downward process. And in S&P and NASDAQ, it's been an upward process. Therefore, we're watching the S&P and NASDAQ for a downturn, particularly NASDAQ 100, because it's where all the leadership is positioned in the front end of that index. We think when they snap, we could see evidence of that this week, by the way. Initial evidence. We put out specific numbers in our reports. We bet you could throw a dart at gold at that point. It'll be turning up as well.
The current market conditions suggest that gold may be on the cusp of a significant breakthrough, with a potential for continued price increases. Similarly, silver's expected outperformance shortly, along with the projected rise in mining company stock prices, indicate that opportunities may abound in the precious metals sector. What are your thoughts on MichaelOliver's gold and silver price predictions? Are you considering adjusting your investment strategy based on these insights? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.